So our discussion for this video is about investments in financial instruments. So syempre ang focus natin will be both equity and debt instruments. So first, let us define what is an investment. So ang sabi ni Sir Valix, investments daw are assets held by an entity for the accretion of wealth through distribution such as interest, royalties, dividends, and rentals for capital appreciation or for other benefits to the investing entity such as those obtained through trading relationships. So, since ang video na to, ang focus is only investments in financial instruments, pero there are other sources of investments other than financial instruments. So, meron din tayong investments in immovable properties and that is the investment properties. Pero yung discussion for those types of investments, that will be discussed in a separate video. Pero dito sa ating discussion na to, ang focus lang natin is financial instruments. So, ano ba ang ibig sabihin ng financial instruments? How does the standard define financial instruments? So, according to PAS 32, Financial Instrument Presentation, a financial instrument daw is any contract that gives rise to a financial asset of one entity and a financial liability or equity instrument of another entity. So, ang sabi rito, in order to have a financial instrument, this must result from a contract. Kung walang kontrata, walang financial instrument. So, ibig sabihin, ang contract is an essential part for the existence of financial instrument. At ang sabi rito, yung contract daw will result to a financial asset of one entity, which is either a financial liability or equity instrument of another entity. So, ngayon, let us define financial asset according to PAS 32, paragraph 11. So, ang sabi niya, a financial asset is any asset daw that is already cash. So, yung cash is the most common type of financial asset. At syempre, kaya nga siya tinawag na financial asset, syempre, from the word financial, ang tinutukoy natin dito is pera. Kaya yung mismong cash is already a financial asset. Then, letter B, an equity instrument of another entity. So, pag sinabi nating equity instrument, this could be ordinary shares or preference shares, pero dapat ng another entity. Ibig sabihin, meron tayong ownership. Tayo ay nagmamay-ari ng shares of stocks from another entity. So, that is a financial instrument. Then, pangatlo, a contractual right to receive cash or another financial asset from another entity. So, ibig sabihin, dito sa letter C, hindi pa ito cash, pero meron tayong contractual right, ibig sabihin right na based sa contract, to receive cash or another financial asset from another entity. So, kapag tayo ay may karapatang makareceive ng cash, so that is a financial asset. Then, yung pangalawa is a contractual right to exchange financial assets or financial liabilities with another entity under conditions that are potentially favorable to the entity. So, pag sinabi natin potentially favorable to the entity, so yung entity na tinutukoy dito is tayo. So, ibig sabihin, dapat daw potentially favorable sa atin. At kung potentially favorable sa atin, ibig sabihin, kung ang tinutukoy natin dito is an exchange transaction, it means na yung matatanggap natin is mas malaki kumpara doon sa ibibigay natin. Kasi dapat potentially favorable. Siyempre, kung mas malaki yung ibibigay natin kaysa sa matatanggap natin, that is not favorable. Siyempre, unfavorable yun kapag ganun. At to become financial asset, dapat favorable sa atin, the entity. Then, yung letter D, a contract that will or may be settled in the entity's own equity instruments. So, hindi natin to i-discuss dito. Kasi from the word derivative, that will be discussed in higher accounting subjects. So, doon nyo pa yan malalaman in detail. So, kaya dito, ang discussion natin for financial asset will only cover letter A, B, and C. Then, ngayon, what is a financial liability? So, ganun din. According to PAS 32, the standard for financial instrument presentation, paragraph 11, ang sabi niya, a financial liability daw is any liability that is a contractual obligation to deliver cash or another financial asset to another entity. So, obviously, kapag meron tayong liability, utang, ang normally pinambabayad natin ay cash, syempre. At kaya tayo magbabayad ng cash kasi tayo ay obligated, which is yung obligation natin ay nakabase sa contract. So, kung hindi man daw cash, which is already a financial asset, ang ating ipambabayad or i-deliver, pwede rin daw nang i-deliver natin ay ibang uri ng financial asset to another entity. O kaya naman, a contractual obligation to exchange financial assets or financial liabilities with another entity under conditions that are potentially unfavorable to the entity. So kung i-differentiate mo tong item na to dun sa financial assets na definition, so dito naman kapag exchange transaction, dapat daw para maging financial liability, dapat sa part natin o sa perspective natin, this will be potentially unfavorable. Ibig sabihin ng potentially unfavorable is dapat in an exchange transaction, mas malaki yung ibibigay natin kaysa sa matatanggap natin. Siyempre, kung mas malaki yung ibibigay mo kaysa sa matatanggap mo, mas lugi ka kapag ganun. And that is unfavorable to the entity. Then, for letter B, so ganun din to, same as financial assets. So, a contract that will or may be settled in the entity's own equity instruments. So, hindi rin natin to i-discuss dito kasi this is more on the comparison between derivative and non-derivative instrument which will be discussed in your higher accounting subjects. So, kung i-visualize natin yung definition ng financial instruments, so, eto yung itsura niya. So, ang sabi uli ng definition natin, so, ang financial instrument is arising from a contract. And yung contract na yon will give rise to a financial asset. At sino yung may financial asset? Yung isang entity daw. Ang tawag natin sa entity na yon ay holder. O kaya naman daw ay investor. Pero normally, yung term na investor only applies if yung financial instrument ay considered as an investment of the holder. At since financial asset ito, so ang discussion nito normally ay dito sa Intermediate Accounting 1. So halos lahat ng financial assets are discussed in Intermediate Accounting 1. Pero there are financial instruments that are discussed in higher accounting subject. Tapos, ang sabi niya rito, ang financial asset natin daw ay either a debt instrument o kaya equity instrument. So, kapag sinabi nating debt instrument, ibig sabihin nito, si holder, siya ay nagpautang. So, syempre, kapag nagpautang si holder, ibig sabihin may nangutang. Ang nangutang, yun yung kabilang party, which is the issuer. At syempre, sa part niya, meron siyang financial liability. So, may utang si issuer dito kay holder kasi si holder ay may debt instrument which is ito yung utang ni issuer kay holder. And again, si holder, yung utang na yon is considered as a financial asset. Pero kay issuer, yung utang na yon is considered as a financial liability. Then, yung other financial asset natin is equity instruments. So, for equity instruments, ito naman, ang hawak-hawak ng holder ay syempre shares of stocks. Shares of stocks ng kabilang entity. And again, yung kabilang entity na yon is the issuer. At dito natin pwedeng i-apply yung term na investee. Kasi yung term na investee normally applies to investment in shares of stocks. Pero syempre, there are financial liabilities that are considered as investment ni holder nung kabilang party. Pero normally, yung term na investments, lagi siyang nag-a-apply halos kay equity. So again, pag sinabi nating equity instrument naman, yung financial asset ng holder, ibig sabihin, si holder or the investor, nagmamay-ari siya ng shares of stocks. At ito yung equity instruments. So shares of stocks nino? So shares of stocks ni issuer or ni investee. Ibig sabihin, nag-issue siya ng kanyang sariling equity instruments. At since sa part ni issuer or ni investee, ang financial asset ni holder or investor ay magiging financial liability or equity instrument sa part ni issuer or investee, so dito naman yun i-discuss sa Intermediate Accounting 2. Kasi sa Intermediate Accounting 2, ang focus doon ay liabilities and equity. At kung titingnan nyo, ang financial instruments lang ay etong financial asset ng holder at financial liability ng issuer. Yung equity instruments, yung sariling equity ni issuer or ni investee ay hindi yun considered as a financial instrument. So ito lang ang considered na financial instrument. Yung financial asset, which is either a debt instrument or equity instrument, at yung financial liability ni issuer. So, ngayon, let us go back to the definition of financial asset. Kasi we are going to provide some examples. Pero only for letter B and letter C. Kasi obviously, yung letter A, that is already a cash, which is the first type of financial asset. So, dito tayo mag-focus sa letter B and letter C. And again, yung letter D, hindi natin to pagtutuunan ng pansin for this particular video kasi nga, this is more on about a topic which is to be discussed in your higher accounting subjects. So, dito tayo sa letter B and letter C. So, dito sa letter B, sabi niya rito, equity instrument. So, ibig sabihin, this is yung shares of stocks. Then, sa letter C, dito papasok yung debt instrument. Kasi when we say debt instrument, so that is a contractual right to receive cash. So, magbigay na tayo ng examples. So, what are the examples of financial asset classified in letter B and letter C? So, ngayon, balik tayo dito. So, pag sinabi nating financial instrument, ibig sabihin nun, sa isang party, meron siyang financial asset na ang counterpart nun sa kabilang party is either a financial liability or an equity instrument. So, ang question is, paano magiging financial liability iyon sa kabilang party or equity instrument? Siyempre, it depends kung anong klaseng financial assets ang meron etong entity na to. Is it a debt instrument or equity instrument? So, again, ito yung sa definition ng financial asset, letter B and letter C. So, ito yung sa letter B, equity instrument of another entity. Tapos, debt instrument, ito yung sa letter C, which is a contractual right to receive cash, which is, dito sa kabilang party, this is a financial liability. So, unahin natin yung mga financial assets in debt instruments. So, anong tawag sa party or sa entity that has a financial asset in debt instrument? Ang tawag natin sa kanya is a creditor, holder, o kaya investor. So, ito yung mga common terms. Tapos, yung debt instrument, dito naman sa kabilang party, which has the financial liability, ang tawag natin sa entity na yon or party is the debtor o kaya the issuer. So ngayon, ano yung mga examples ng debt instruments? So meron tayong yung most common, accounts receivable and notes receivable. Alam naman natin, ang may account title na accounts receivable at notes receivable is the creditor. So sila yung gumagamit ng mga account titles na to kasi sila yung nagpapautang. Which is, ang counterpart nila doon sa libro ng nangutang, which is the debtor, is yung accounts payable at yung notes payable. And both of these are financial liabilities of the debtor to the creditor. And again, these are debt instruments. Pero kay creditor, this is considered as a financial asset. Pero kay debtor, these are considered as a financial liability. So ngayon, punta naman tayo dun sa other types of financial assets in debt instruments. So meron din tayong loans receivable and investment in bonds. And again, ang entity na gumagamit ng mga account title na to is the creditor or the holder or the investor. At ang counterpart naman nila sa kabilang entity ay loans payable or bonds payable, which is again a financial liability in the books of the debtor or the issuer. So, punta naman tayo ngayon sa financial assets in equity instruments. So, kapag itong equity instruments na to is considered as a financial asset, ibig sabihin nun, tayo ay owner ng shares of stocks, which represents our ownership of another entity. So, tayo, yung may financial asset, ang tawag sa atin is the holder o kaya naman investor. Yung another entity naman na nag-issue ng shares of stocks, ang tawag doon is the investee or the issuer. So, kay investor or kay holder, yung mga common types ng financial assets in equity instruments ay investment in associate, tsaka investment in subsidiaries. So, ito yung mga example natin. Tapos, dito naman sa point of view ni investee or ni issuer, syempre, ito yung kanyang share capital. And we have two classes of share capital, the ordinary share, tsaka preference share capital. So, etong lahat ng financial assets na to, yung majority ng financial assets will be discussed in Intermediate Accounting 1. Then, for the financial liabilities and equity, itong mga to naman ay i-discuss syempre sa Intermediate Accounting 2. So, kung titingnan nyo, etong tatlo yung magkakapares sila ng kulay, di ba? Yung financial asset, in debt instrument, equity instrument, tsaka financial liability. Kasi etong tatlong to, eto yung mga financial instruments. Etong equity, the ordinary share or preference share of the issuer or the investee, ito ay hindi considered as a financial instrument. Kapag yung equity instrument ay sarili mong equity. So again, hindi ito financial instrument. Ito lang ang financial instrument. Yung financial liability at saka yung debt instrument at yung equity instrument. Kung yung equity instrument is an equity of another entity. So, since our focus is financial asset, kasi ang subject natin is Intermediate Accounting 1, so ang discussion natin will dwell only on financial assets, and it will be based on the standard for financial instruments, which is the PFRS 9. So, how do we classify daw a financial asset? And again, when we say a financial asset, it refers to both debt and equity instruments. So, an entity shall classify financial assets as subsequently measured at amortized cost, fair value through other comprehensive income, or fair value through profit or loss on the basis of both. Letter A, the entity's business model for managing the financial assets and the contractual cash flow characteristics of the financial asset. So, according to paragraph 4.1.1, so meron tayong tatlong classification ng financial assets under PFRS 9. So, meron tayong una, at amortized cost, which is only applicable for debt instruments. Kasi, ang ina-amortize lang naman ay debt instruments. Never ina-amortize ang equity instruments. Then, meron din tayong fair value through other comprehensive income at fair value through profit or loss. So, itong dalawang fair value na to, OCI and profit or loss, are both applicable to debt instruments and equity instruments. Ang tanging measurement basis natin na tanging hindi applicable kay equity instrument is itong at amortized cost. So, para doon makapili tayo dun sa tatlo, so, kailangan gamitin natin itong basis, itong letter A and letter B. So, ano ba yung letter A? Sabi niya rito, the business model. So, pag sabi natin business model ng entity for managing the financial assets, so, ibig sabihin ng business model, ito yung pinaka-purpose ng entity. Bakit siya nag-invest sa either debt or equity instrument. Then, letter B, the contractual cash flow characteristics of the financial asset. So, itong letter B, this is more applicable on debt instruments kasi ang equity instruments ay wala namang contractual cash flow. Kasi when we say contractual cash flow, dapat merong mga specified dates in the future na makakatanggap tayo ng cash flow and hindi yun applicable for equity instruments. This will apply for debt instruments kasi based sa kontrata ng isang debt instrument, alam natin yung mga petsa kung kailan tayo makaka-receive ng cash flow, and specifically, ito yung for the interest and the principal. So based doon sa contract ng debt instrument, alam natin kung kailan natin i-expect na marireceive natin yung interest tsaka yung principal. So ngayon, let us determine how do we classify a financial asset as amortized cost or fair value through OCI. So ito munang dalawa. And again, ito ay based on PFRS 9. So, sabi sa paragraph 4.1.2, a financial asset shall be measured at amortized cost if both of the following conditions are met. So, ibig sabihin, dapat yung A and B ma-meet kasi nga both. So, una, the financial assets is held within a business model whose objective is to hold financial assets in order to collect contractual cash flows. So, dito sa letter A, ang pinaka-objective ng entity is makolekta lahat ng cash flows based doon sa kontrata. So, ibig sabihin, ang kanyang goal dito, ang kanyang purpose is hold to collect. So, hanggang kailan niya i-hold to collect? So, it means na para makolekta niya yung mga cash flows based doon sa contract, kailangan yung investment must be held to maturity. Kailangan niyang tapusin yung maturity. Then, sa letter B naman, sabi niya, the contractual terms of the financial asset give rise on specified dates to cash flows that are solely payments of principal and interest on the principal amount outstanding. So, dito naman sa letter B, so dapat daw doon based sa contract, mayroong specific dates kung kailan natin marireceive yung payments ng payments ng principal at ng interest on the principal outstanding. So, ibig sabihin, itong letter B, this refers to debt instrument. So, kasi this is not applicable for an equity instrument kasi ang isang equity instrument naman ay walang principal at walang interest on the principal amount outstanding. So, ibig sabihin, itong mga conditions na to, ito ay applicable for a debt instrument. Kasi nga, this is at amortized cost. At ang amortized cost is not applicable for equity instruments. Then, dito naman tayo sa paragraph 4.1.2a. So, this time, let us determine the basis for our classification for a financial asset at fair value through OCI. And ganun din ang sabi niya, both of the following conditions must be met. So, etong A and B. So, sabi niya sa letter A, the financial asset daw is held within a business model whose objective is achieved by both collecting contractual cash flows and selling financial assets. So, yung letter A, hawig siya sa letter A ni amortized cost. The only difference is etong naka-highlight na to. May additional dito kay OCI. Yung isa sa kanyang objective ay to sell the financial asset. So, unlike dito sa letter A ni amortized cost, ang goal niya lang rito or ang kanyang objective is just to collect the contractual cash flows. Pero dito kay OCI, ang goal niya or ang objective niya is not only to collect the contractual cash flows but also to sell the financial assets. So, anong difference nitong letter A ni OCI sa letter A ni amortized cost? So, kung balak ng entity ay ibenta yung financial asset, ibig sabihin, hindi niya tatapusin yung maturity. Kasi you can only sell a debt instrument only prior to maturity. Hindi mo naman mabebenta ang financial asset at maturity. So, walang bibili nun. So, mabebenta mo lang siya before maturity. So, ibig sabihin, hindi niya aantaying matapos yung maturity o yung term ng kontrata. Ang cash flows lang na may receive niya is yung mga cash flows bago niya ibenta yung financial asset. Unlike dito sa amortized cost, hindi niya ibebenta yung financial asset. Hindi kasama yun sa kanyang objective. Ang objective lang niya is to collect the contractual cash flows. At makokolekta niya rito ang contractual cash flows, syempre, kung tatapusin niya yung term ng contract, which is until the date of maturity. Then, dito tayo sa letter B. Sa letter B, the contractual terms of the financial asset give rise on specified dates to cash flows that are solely payments of principal and interest on the principal amount outstanding. So, itong letter B ni OCI is similar sa letter B ni amortized cost. So, ibig sabihin, itong conditions na to for a financial asset to be measured at fair value through OCI, etong under paragraph 4.1.2a is only applicable again for a debt instrument. Kasi nga, sabi rito, dapat daw both of the conditions, letter A and letter B, must be met. Etong letter B, this only applies to a debt instrument kasi payments of principal and interest. Ano lang ba ang instrument na may principal and interest? And that is only the debt instrument. Ang equity instrument ay walang payment of principal and interest. So ngayon, kailan naman tayo pwede mag-classify ng financial asset at fair value through profit or loss? Sabi niya, a financial asset shall be measured at fair value through profit or loss unless it is measured at amortized cost or at fair value through other comprehensive income. So ito yung diniscuss natin sa previous slide. So dito, under paragraph 4.1.4, ang financial asset in debt instrument can only be measured at fair value through profit or loss kung yung financial asset in debt instruments, yung kanyang mga conditions ay hindi pasok para dun sa conditions under fair value through OCI at amortized cost. So, kung hindi siya pasok doon sa mga conditions na yon, so this is the only time na pwede nating i-measure ang ating financial asset in debt instrument at fair value through profit or loss. Pero dito sa paragraph 4.1.5, ang sabi niya, despite paragraphs 4.1.1 to 4.1.4, which is yung previous slides na diniscuss natin, pati itong diniscuss natin dito, an entity daw may, at initial recognition, irrevocably designate a financial asset as measured at fair value through profit or loss if doing so eliminates or significantly reduces a measurement or recognition inconsistency, sometimes referred to as an accounting mismatch, that would otherwise arise from measuring assets or liabilities or recognizing the gains and losses on them on different bases. So, ang sabi natin dito sa paragraph 4.1.4, kapag hindi pasok sa mga conditions for amortized cost and OCI ang financial asset, pwede natin siyang i-classify as fair value through profit or loss. Pero, despite daw doon sa ganong rule, pwede daw na ang entity at initial recognition, so sa start pa lang, may irrevocably designate a financial asset as measured at fair value through profit or loss. So kahit na daw pasok siya sa conditions for amortized cost and OCI, pwede pa rin daw natin siyang i-classify as fair value through profit or loss at initial recognition. At yun ay irrevocable. Kung ang purpose daw natin is to eliminate or significantly reduce a measurement or recognition inconsistency. Or, ang other term is accounting mismatch. So, kapag meron daw accounting mismatch, kahit na yung financial asset ay pasok sa amortized cost or fair value through OCI, pwede pa rin daw natin siyang i-designate as fair value through profit or loss, just to avoid accounting mismatch. At yun daw should be designated at initial recognition. And upon designation daw, it is irrevocable. Ibig sabihin, wala nang urungan. So, ano ba ang ibig sabihin ng accounting mismatch? So, when we say accounting mismatch, ibig sabihin, meron daw mga assets and liabilities na related to each other, pero they are measured using different bases. So, since related sila, dapat parehas yung treatment sa kanila. Kung ano yung measurement basis ng assets, dapat ganun din for liabilities. So, kung magiging iba yung measurement basis ng isa, so magkakaroon ng inconsistency. So, para ma-avoid natin yung mismatch, So, allowed na gawin siyang profit or loss kahit na pasok pa rin siya sa amortized cost or OCI. So, ngayon, let us proceed to the summary for measurement basis of financial assets in debt instruments. So, kanina may na-discuss tayong two conditions. Yun yung business model and the contractual cash flows. So, kapag ang iyong analysis ay pasok yung dalawang conditions na yon sa iyong financial assets in debt instruments, pwede nating i-classify yung ating debt instrument either at fair value through other comprehensive income o kaya naman daw at amortized cost. At kapag pasok yung mga conditions na yon sa iyong financial asset in debt instruments, ibig sabihin ang iyong debt instrument is not held for trading. Bakit siya not held for trading? Kasi ang business model mo is hold to collect. Ano yung gusto mong makolekta? Yung SPPI. So yung SPPI is solely payments of principal and interest. So kapag ito lang yung iyong gustong makolekta, ibig sabihin kailangan mong i-hold yung debt instrument until maturity. So ang measurement basis na gagamitin natin kapag ganun is at amortized cost. Pero kung bukod sa principal and interest, gusto mo rin siyang ibenta, so this is the time you can choose yung measurement basis natin na fair value through other comprehensive income, which is yung OCI na to, the other comprehensive income is with recycling. At kapag sinabi natin with recycling, it means yung OCI, bago siya isara sa retained earnings, ibig sabihin dadaan mo na siya sa profit or loss. Pero in case na ang iyong financial asset in debt instrument ay hindi pasok doon sa mga conditions na binanggit natin para sila ay maklasify as FVOCI or at amortized cost, ibig sabihin, yung financial asset in debt instrument mo is held for trading. So pag sinabi nating held for trading, ibig sabihin, this is held for immediate sale. So, ibibenta agad natin to. Bakit natin ibibenta agad? Kasi ang goal natin kapag ang isang financial asset is held for trading, mapa-debt instrument man or mapa-equity instrument, ang goal natin is to generate revenue from the fluctuations in the fair value of the financial asset, mapa-debt instrument or mapa-equity instrument. Siyempre, magkakaroon tayo ng revenue if yung fair value will increase. So, yun yung gusto nating mangyari kapag ang financial asset in debt or equity instrument is held for trading. Na kumita tayo through the fluctuations in the fair value of the financial asset. So, kapag gaganon, kapag ang financial asset is held for trading, ang accounting treatment natin, ang measurement basis will be at fair value through profit or loss. Pero merong instances na kahit daw not for trading yung ating financial asset in debt instrument, pwede natin gamitin yung fair value through profit or loss. Kailan? Just to avoid accounting mismatch. So kung ito yung goal natin, kahit yung condition niya is pasok for FVOCI or at amortized cost, pero ang goal natin is to avoid accounting mismatch, pwede nating piliin yung FVPL as a measurement basis. At once ito ang pinili natin, this will be irrevocable. So, ngayon, let us proceed to equity instruments naman. So, paano ang ating classification for equity instruments? So, ang sabi rito, balikan natin yung paragraph 4.1.4. Sabi niya, a financial asset shall be measured at fair value through profit or loss unless it is measured at amortized cost or at fair value through other comprehensive income. So, initially, ang ating classification must be fair value through profit or loss. Pero, sabi niya rito, however, an entity may make an irrevocable election at initial recognition for particular investments in equity instruments that would otherwise be measured at fair value through profit or loss, to present subsequent changes in fair value in other comprehensive income. So, in this case, may choice si entity na instead of classifying its financial asset in equity instrument as fair value through profit or loss, so pwede daw niya ito i-measure using fair value through other comprehensive income. So, ano yung requirement para dito? So, according to paragraph 5.7.5, at initial recognition, an entity may make an irrevocable election to present in other comprehensive income subsequent changes in the fair value of an investment in an equity instrument within the scope of this standard that is neither held for trading nor contingent consideration recognized by an acquirer in a business combination to which IFRS 3 applies. So, ang sabi rito, ang pwede daw nating i-classify or i-measure na financial asset in equity instruments as fair value through other comprehensive income ay yung hindi for trading. O kaya naman, hindi rin contingent consideration that is recognized by an acquirer in a business combination. So, etong contingent consideration na to, this will not be discussed in Intermediate Accounting 1. Instead, it will be discussed in Advanced Accounting sa Accounting for Business Combination. So, again, ang financial asset in equity instrument na pwede nating i-measure using fair value through other comprehensive income is ito. Dapat daw hindi held for trading at hindi siya contingent consideration. At kailan niya dapat piliin yung fair value through other comprehensive income? Dapat sa umpisa pa lang at initial recognition. At once na yun ang pinili niya, that is irrevocable. So ngayon, let's discuss more equity instrument in detail. So kung titingnan nyo rito, meron tayo ritong 4 na under ng equity instruments. So etong una, eto yung under ng IFRS 9. And etong tatlo na to, eto syempre ay hindi under ng IFRS 9. So, itong tatlong to is based on a different set of accounting standards. So, for equity instruments, yung ating measurement basis na gagamitin natin is depende kung ano yung naibibigay sa atin ng ownership of shares of stocks dito. So, syempre, since ito ay equity instrument, pero equity instrument to ng another entity, so in effect, tayo ay owners or shareholders nung another entity na yon, nung investee. Kasi syempre, nagmamay-ari tayo ng kanilang shares of stocks. Syempre, once you become an owner, meron kang mga privilege na pwede mong i-exercise or right na pwede mong i-exercise over the investee. So, eto yon, meron tayo ritong 4. At yung 4 na to, iba-iba yung ating accounting treatment. So, unahin natin yung under IFRS 9. So, ano ba yung mga financial asset in equity instruments of another entity na kinakailangang gamitan ng IFRS 9? So, yun yung mga financial assets in equity instruments na hindi magbibigay kay entity ng significant influence, control, or joint control. So, ito yung under IFRS 9. So, kapag yung ownership natin in shares of stocks of another entity will not give us significant influence, control, or joint control, so ang gagamitin natin is IFRS 9. So, under IFRS 9, kapag quoted shares, ibig sabihin ng quoted shares, merong available na fair value kasi quoted siya in an active market. So, malalaman natin yung fair value. So, yung quoted shares, ito yung mga shares of stocks ng mga corporations na publicly listed. Pag sinabi nating publicly listed ang isang corporation, it means na yung kanyang shares of stocks ay mabebenta sa stock exchange. So, ano yung stock exchange? So, ito yung stock market, yung other term, which is market. So, ibig sabihin, palengke. So, sa palengke, may buyer and seller. So, ibig sabihin, bentahan to or palengke to ng mga shares of stocks. At sino ang mga makakabili? So, ang makakabili is yung public or yung taong bayan. So, may chance tayong mga normal na tao makabili ng shares of stocks ng mga corporation na to. Kasi hindi naman lahat ng corporation ay nagbebenta ng shares sa public. So, kapag ang shares of stocks is a quoted share, so may available fair value siya, so imi-measure natin yung financial asset na yon in equity instrument as a financial asset in fair value through profit or loss. So, ito yung ating initial accounting treatment. Pero, ang sabi nga natin kanina as discussed in the previous slide, so si standard, si IFRS 9, binigyan ng option si investor na pwede daw niyang piliin yung fair value through other comprehensive income. at initial recognition. At once yun ang pinili niya, that will be irrevocable. At syempre, may requirement. Before a quoted share can be measured at fair value through other comprehensive income, dapat daw yung shares na yon is not for trading. At syempre daw, dapat hindi siya contingent consideration. Pero since tayo ay nasa intermediate accounting 1 pa lang, so ito muna yung requirement natin. So dapat daw yung shares is not for trading. Then, syempre, there are instances na yung shares of stocks ng isang entity ay hindi quoted. So, walang available fair value kasi hindi siya traded in an active market. So, ang tawag natin doon is unquoted shares. So, itong mga unquoted shares, normally, ito yung mga shares of stocks ng mga corporation na ang kanilang shares of stocks ay hindi binebenta sa publiko sa stock exchange o sa stock market. Ibig sabihin, walang chance ang public magkaroon ng ownership sa kanilang mga shares of stocks. So, sino-sino lang ang pwedeng makabili ng kanilang shares of stocks. So, normally, ito yung mga corporation na family-owned na ayaw nila magpapasok ng mga outsider. So, normally, ito yung mga unquoted shares. So, kapag unquoted shares, so hindi tayo pwedeng gumamit ng fair value kasi nga, when we say fair value, nakabase yung value niya sa quoted price. So, yung quoted price and fair value are synonymous. So, ang gagamitin natin is the cost method. Once yung shares ng another entity is an unquoted shares. So, ngayon, ito yung under ng IFRS 9. Ano naman yung mga financial asset na hindi under ng IFRS 9? So, yun yung mga financial assets in equity instruments na nagbibigay sa investor ng significant influence, control, at joint control. So, ano-ano ba ang ibig sabihin nitong tatlong to? So, unahin natin ang control. So, pag sinabing control, this is the power over the investee or the power to govern the financial and operating policies of an entity so as to obtain benefits. So, when we say significant influence naman, this is the power to participate in the financial and operating policy decision of an entity but not control of those policies. Then, when we say joint control, this is a contractual agreement on the sharing of control over an economic activity. So, sa control, obviously, pag sinabi natin control, ikaw yung nagdidikta kung ano yung mangyayari or yung dapat gawin para sa pagmamanage ng company. Kasi nga meron kang control, ikaw yung nasusunod. Pero pag sinabi nating significant influence, hindi mo yung kayang gawin, hindi mo kayang magdikta. So kung ano yung sasabihin mo, hindi yun yung mangyari. Unlike dito sa control, syempre pag sinabing control, kung ano yung gusto mong mangyari, yun ang mangyayari. Pero for significant influence, kung ano yung gusto mong mangyari, not necessarily yun yung masusunod. Pero pwede nila yung i-consider. So, ibig sabihin, sa significant influence, pwede ka lang mag-share ng idea na pwedeng i-consider, syempre, sa mga decision making for the management of the entity. So, paano naman yung sa joint control? So, pag sinabi natin joint control, since may control din siya, so kung ano yung nagagawa dito sa control alone, yun din ang nagagawa sa joint control. So, kung sino may joint control, sila yung kayang magdikta kung ano yung magiging direction ng management ng entity. So, anong difference between control at joint control? Kung parehas lang silang power over the investee or power to govern the financial and operating policies of an entity. So, ang difference ng control from joint control is that sa control, isang entity lang, isang investor lang ang may control over the investee. Pero sa joint control, there could be 2 or more entities na nag-share ng control over the investee. So, ibig sabihin, ang difference ng dalawa is yung number of investors na kayang mag-control sa entity. So, kapag control, ibig sabihin, isa lang yung investor na may control. At kapag joint control, ibig sabihin, there are 2 or more investors na kayang mag-control. At yung 2 or more investors na yon, collectively, sila yung merong joint control. So ngayon, balik tayo dito. So, since na-discuss ko na ang differences between significant influence, control, and joint control, so pag sinabi nating significant influence, ang standard na gagamitin natin is IAS 28 or the investment in associate and joint venture. So, under IAS 28, once ang financial asset in equity instrument will give the investor significant influence. So, ang gagamitin nating accounting treatment is equity method. And this will be discussed in Intermediate Accounting 1. Then, kapag ang financial asset in equity instrument naman will give the investor control over the investee, so ang gagamitin nating standards ay IFRS 3 and IFRS 10. Tapos, ang accounting method natin is either cost method or equity method. Pero ito ay to be discussed in your higher accounting subjects, which is yung accounting for business combination. So, hindi natin ito i-discuss dito sa Intermediate Accounting 1. Ganon din itong joint control. Dun din to sa inyong higher accounting subjects. So, ang joint control naman is under IFRS 11. And yung joint control has two classifications. So, yun yung joint operations at yung joint venture. So, yung joint venture is also accounted for using the same standard as significant influence. So, that is also IAS 28. So, etong dalawang to, yung control at joint control, i-discuss to in a different subjects. Pero etong dalawang to, yung under IFRS 9 tsaka yung IAS 28 for significant influence, i-discuss natin to dito sa Intermediate Accounting 1. Again, ang differences ng mga to is kapag control at joint control, sila yung nagde-direct mismo sa magiging management ng entity. So that is control and joint control. Pero when it comes to significant influence, nag-share lang siya ng idea na pwedeng i-consider sa pagmamanage ng entity. At yung mga shareholders or investors na walang significant influence, control, or joint control, so sila yung mga investors na sunod-sunuran lang sa kung anong sasabihin ng leader. Tapos, kung napapansin nyo, meron kayo nakikita ang mga percentage dyan. 20% tsaka 50%. So, ano itong mga percentages na to? So, these are percentage of ownership. So, kung gaano kadami yung ownership natin in shares of stocks ng isang corporation. So, para saan to mga percentage of ownership na to? So, eto yung nagiging basis natin kung ano yung right or privilege na kaya nating ma-exercise over the investee. So, pero ito ay mga default assumption lang. So, kapag sinabing default assumption, kapag walang ibang information na binigay, ang assumption natin, kapag ang ownership is less than 20%, yung ownership na yon in shares of stocks will not give the investor any significant influence, control, or joint control over the investee. Tapos, kapag ang ownership naman niya is 20% to 50% of the share capital of the investee, ang assumption natin, si investor ay may significant influence over the investee. Tapos, kapag more than 50% naman ang kanyang ownership, ang default assumption natin is si investor ay kaya niyang makontrol si investee. So again, these percentages of ownership are only default assumption in the absence of other information. Kasi, para malaman natin kung meron talagang significant influence or control ang investor over the investee, hindi lang yon naka-base mismo sa percentage of ownership. Dapat kaya nating ma-observe na si investor ay may significant influence or control. Dapat nakikita natin na na-exercise talaga yon ni investor over the investee. Again, etong mga percentage of ownership na to, these are only default assumption. And for joint control naman, so kung titingnan nyo, walang percentage of ownership. Kasi ang sabi rito, sa definition natin kanina for joint control, ito ay result of a contractual agreement. So, yung percentage of ownership, syempre, it depends on the contract, the agreement between the shareholders. So, this ends our discussion on financial instruments, specifically investments in equity instruments and debt instruments. So, class dismissed.